Hey, what's up, everybody? Hopefully everybody's having a great weekend and hopefully everybody had a great week. So this is Chef again, and we're going to talk about the market today, and we're going to try to keep it short with about 6 to 7 tickers for the watch list, because something very, very important is uh, to note of this week, and that has to do with the S&P 500, basically forward slash ES. It's the doji that is created right now on the weekly time frame. Now, right now, market's closed. Nothing is open. Today is Sunday, and the futures do open a little bit later on tonight. I don't know if we're gonna gap up, gap down, stay range. I literally don't know. Now, I'm not here to predict anything, but I am here to explain to you the importance of this week that's coming up. The importance of this week is the doji that's happening here in the market. Basically, what this is saying is that after all this run up, right? Uh, let's see, like you're basically looking at this run up, and then you're looking at this volatile year. So since the beginning of the year, we've been trending down. So yes, the overall sentiment in the market is still bearish. A lot of the news that's happening is still leaning to the bearish side. Some of the data is looking good. Some of the numbers are looking bad. Other things are developing, like tensions with Taiwan, with Pelosi, and the feds of the increase of the new rates, and more and more, and it just keeps going. So this year has just been volatile. Last year and the year before that, we had COVID, which only lasted like about a month or two. And then after that, we literally just recovered all the way into the next year. So we had a bullish run after COVID. So there wasn't a lot of volatility. All this really was just like a surprise, like, COVID is here, but it's gone now. So, congratulations, buy the dip and you're rich. And now it's just data after data every week, earnings after earnings that's starting, and the results for earnings, and people getting laid off. I mean, companies that have lost money, and the Fed rate hikes, and then no more COVID, but it's monkeypox, and tensions between Taiwan and China, and I don't know what else. All right, and the war with Ukraine. So there's a lot of stuff that this year has just been driving the market to the downside. So again, overall sentiment, I'm going to tell you guys that it's still bearish. Okay. We've been saying bearish since the beginning of the year. Now, this one here, we tried to buy the dip a couple times. It worked out. We tried to buy the dip a couple times here. It worked out again. But overall, remember that the overall sentiment is still bearish. Nothing has really changed. What happens here is that you get these trends, right? So this one is bearish. This one is bullish. This one is bearish as heck. This one was like short-term bullish, and everybody was so excited. And then what happened is everybody got smacked down to the downside. Like bears are still in control on huge green candles. Like they love the green candles just as much as a bull likes a massive red candle, because they like buying dips. Overall, again, we are in a bearish market, guys. Now, what does that mean for this week and this doji? Okay, where are we currently? And I'm going to break this down for you. I already have some of these trend lines on here, because it's the importance of having a full breakdown, right? And just to kind of understand where we're going and where the levels are going to be. Don't mind the pink ones just yet, all right? Or purple, whatever they are. What you want to see now is the fact that we do have this doji, and we're in an area, number one, after a nice breakout of this specific piece here. Okay, so this one was the one that we were squeezing real tight. Basically, all the buyers came in because you see all these buyers, right? So we squeezed down here in the bottom. We kind of dropped down right here, right at the beginning, like Monday, Tuesday, and then we just rallied all the way into the week, giving us a clear break of this specific resistance. And then we moved on way up here. So we confirmed it with a nice strong bullish candle, right? That's what this huge bullish engulfing means. So it's a continuation of the breakout from the bottom of this piece. Not necessarily saying that we're going bullish, we're going to hit all-time high soon. But what it means is that we're currently bullish in the markets, and we're heading towards these levels to retest specific areas. The doji, why it's important to understand, it's because when it's placed in a supply or demand zone, support or resistance, it creates the indecision of where are we going next. Going next, it's how you going to identify where what level is going to be that level that's going to tell you, hey, we're leaning bearish, or hey, this rejected, let's go bearish or bullish, whichever one. That's what you got to find. So this is where we currently are at right now. In the past, we've seen this 48.08 drop all the way down into this 41 level, okay? That's number one. Here, we stalled. Here you can see that we stalled again. And then here we broke above, and then we came inside and tested that same specific level, and now we're inside of it, right? Look where we closed the candle bodies here. Look where we rejected here. This is very, very important. We didn't even touch that top just yet. So we're still kind of like in between a retest supply that can become a new demand, all right? I'm not saying that this is going to be a new demand just yet, and I'm not saying that it's going to be a hard rejection just yet, but either one can come first, and whichever one does, I hope you're going to be in the right direction and not come on here and get biased just because there's so much volatility and so much bad news all across the board. Again, don't come in here saying, oh, there's a doji, we're heading into recession, the numbers are looking bad, the data's this, data's that. No, it doesn't matter. What matters is the fact that we have a doji at a supply that can potentially be a strong rejection, or strong breakout. Okay, very simple. That's all you need to know. That no matter what's going on in the world right now, no matter how bad it looks, no matter how bad tensions are, no matter what the war is going on right now, where they're at, where they stand, I don't know. Whatever the feds are saying, whatever data's coming out for the new earning reports, whoever's getting laid off, I mean, whatever production is slowing down, whatever, I don't care what it is. What you have to understand this specific week is the importance of this doji, no matter what's going on, guys. All right. Now we're going to find two levels here that are going to be very, very important. And this is the easiest thing that you can find this week. And this is how important it is. See this candle body? I want you guys to mark that. Once we start breaking above, I want you guys to consider your plays bullish across the board. Once we start breaking down, I want you guys to start thinking a little more bearish in the market. So if we're above this, your plays should be recommended to play calls. If we're below it, if we're below the doji, right here, this candle body, recommendation is to get into some plays that are a lot more bearish. Number one, because if we break above and you're in a breakout level for a call side, you want the levels to be above in order for your ticker to break out above. Number two, if we are on the bearish side, if your ticker is rejecting, if it's breaking levels to the downside, you want the market to be at these levels on the bottom and continue to the downside. This is how simple it's going to be the rest of the week. Okay, that's it. This is all you need right here. This is literally the key to success the rest of this week. Break above, we're leaning bullish. Break below, we're leaning bearish, guys. All right. I hope this makes sense for you guys, and I hope this doji is explained properly so you guys don't get mixed up later. Find the levels on the 4-hour time frame. Find the levels on the 1-hour time frame. I don't care if you find it on the 1 minute. As long as we're below that specific box right there, that yellow one, that candle body, we're gonna head in that direction based on sentiment. Now, if you grab that wick, okay, those wicks, if those wicks break, that's going to give you stronger confirmation to the upside or downside, meaning that go ahead and rock those puts below. Go ahead and rock those plays up above to the call side, whatever it is. All right. So that's kind of the sentiment that I'm going to provide for you guys. And that's what we're looking for. Remember, a doji is an indecision. So whoever takes control of that middle point, whatever seller, whatever buyer takes control, that's the direction that we're going to head. Now, we could go up and down in between. We can go up and down in between up the top. Now, I don't know how to predict that, but it's definitely the sentiment. Remember, if we're above those levels, let's go long. If we're below it, let's go short, plain and simple, right? So now I'm going to drop down on the 4-hour, and I'm going to give you some levels to the upside and the downside. Now, if this breaks structure right here, this high right here of that 41.65 level, we're going to try to touch that 42. Once you break the 42, you're looking for 42.50, and then you're looking at highs of 43. Okay, this is as high as I want to see a bullish play. If we continued below that 41 and then just below this 40, what is this, 4087, 4088, want to round it off, you do 4090 or you 4080. Okay, you want to get a little more technical, 4080. Then you're going to drop back down into these bottom levels of here. Okay. All right, so that's going to be your downside price points, and then that's going to be your upside price points. Okay, so I'm giving you the structures, and all I did was find these structures. I'm not going any further than the next structures. All right, here. So here's your 4K, and here's your 3950 level, all the way down to that 3928, 3930, around there. Okay, so that's all you really need to know for the rest of the week, guys. If that's not, if that's complicated, I really don't know how else to explain it. Just know that above that box, this yellow box, we're leaning bullish. Below it, we're leaning a bit bearish, no matter where the market is. The market's going to have its intraday moves. It's going to go up and down intraday, and you can use the pre-market levels, the previous day high, the previous day low for guidance into your trades. But just know that the overall sentiment, again, is going to be over that little yellow box and over that candle body, and that's it of that doji, guys. That's how important this is. All right. Now, what I'm going to give you is I'm going to break down a few tickers here that have my attention the most for this upcoming week. Other than that, I really don't care about anything else because I either want to see, like right now we're in a doji in an indecision place. Now, if we get a direction, the stocks that I'm about to give you are going to find direction. And that's exactly what I want. I want to either break above or a strong rejection, and let's go back down. Okay, that's what I'm going to give you guys, all right? So the first one is going to be JPM. JPM is a financial, and this one has been down for quite some time. If you guys go take a look at BAC, WFC, CMS, a lot of the banks have been trending since earnings. So about like 3 weeks ago. Yeah, about 3 weeks ago. JPM was the only one that failed and then dropped, but came back inside, and it's still accumulating. If you guys don't know, this is the accumulation phase, and then I'm gonna make another video of this for conservative collectors in the private server, some private education. So if you're not part of conservative collectors just yet, make sure you sign up because a lot of this stuff is going to be explained more for the educational aspect. Now, JPM, we did catch the bottom last week. We bought some calls right here, and then we ran it out for like, I think it was over 200% play that hit the target of 116. Now, I want you guys keep alerts, okay? Some major alerts for this. Once this range breaks out, guys, okay, you're going to expect a huge run, all right? So it's been consolidating here for quite some time. Now, this range is from basically 111 all the way to 117. So I'm going to expect a $6 move above 117. 18, 19, 20, 21, 22, 23, 24. This is the level where I'm going to be targeting after we break out of that range. All I did was measure the size of the range. It's going to be that size of the break. So stay alert on this, all right? Now, I'm not saying this is going to break out Monday. It can be Tuesday. I mean, look at the way it's been trading sideways, but this is the only candle that we've seen so far that's showing bulls are in control at these bottom levels. So the bulls like this. So the bulls are accumulating here, and they're buying at the lowest points for JPM. And you got to think too, long-term investments are great at these dip buy opportunities, because imagine if this thing breaks out and banks start to rally. Look at the profit margin that JPM has. That is huge profit margin. Like, imagine you buying, right? Let's just say, for instance, let's just say at 116, right? You buy like 1,000 shares. What is 116? What is 1,000 times 116? Basically, like, basically that's what you want to do, and we're gonna head up to that like 170, and that's how much profit you're gonna be making. Like, and I'm not saying this is gonna happen overnight, but that's the way that the investors look at it. It's they times it per share. So if this thing moves up $1, like you'll be pretty wealthy, all right? But yeah, that's just kind of like a little idea. But anyways, that's kind of what we're looking for. We're looking for a staircase pattern, and we're looking for a change in direction for JPM. Only with a good bullish market, a good bullish sentiment, even if the market decides to stay range, I think JPM will have a higher chance of breaking out this week to the upside. If not, again, the strong rejection is here at supply. You know what to do. Break below 116. You're coming back down to puts to this 112. As you can see, it's been ranging and it's looking great. All right. So make sure you keep your alerts on JPM. The next one is going to be Netflix. Netflix is going to be a ticker that is all eyes on me. A lot of traders like to look for these gap fills, and I'm going to show you the daily time frame because this is what a lot of traders like to look into. They think that this is the greatest thing in the world. All right, so you have a gap from this 333 and that 245. But here, you don't have a lot of structure, okay? So this red candle, there's no structure. It's literally just a drop down. So it's a drop down from the earnings and then drop down some more. So this is like your breakout point, the 228 and 230, right? The daily time frame, you can see that we're just kind of squeezing in here, right? I think some people are probably gonna do this here. They're gonna do that, and they're gonna call that a pattern. And we're building pressure here, so this can be a rising wedge and then drop down, or it can literally just rally on up. So that's the reason I don't like looking at the daily. I like looking at the 4-hour time frame because it gives you all the data that you need. So knowing that we have this no man's land, you kind of have the same thing. Okay, because this is going to be drawn all over the place. Now, for me, I think over 228 because you're breaking the structure. The difference here is that I'm looking for all this to break and just to do something like this. That's kind of like what I'm looking for Netflix. Again, the market has to be on my side. Otherwise, that rising wedge that somebody's going to call out is going to break to the downside, and then we're just going to reject very hard and come back to the bottom. Okay, so very simple again here with Netflix. Okay, you can either trade the pattern or you can go long over the 228, which is the 228 and 230 psychological, that you're breaking over the structure and you're headed for the long side, okay, with or without that pattern. The next one is going to be BAC. It's another bank. Same thing, same as JPM. The difference here is that BAC is a little more ahead of JPM. And if JPM can continue and rally, I think BAC will kind of go in that direction as well. So nice downtrend, nice cool off, and then here's your rally. Here's your base. Now we're looking for the break of 34 or the rejection at 33. One of the two is going to happen, guys. So make sure you guys keep those alerts. All you got to do is measure the 33 to 34, and you know that it's going to move a nice $1 or $2 move, right? BAC is a small ticker, so it's good for all account sizes out there. The next thing I want to show you is Google. Google, since it became a new stock, it basically split here. So this is important to note. Since we split, we kind of dropped down into these earnings, but after earnings, it's just been trending up. So the current status for Google is a nice uptrend. It's a great company. The structure is perfect. It's cheap. It's at 117 versus like, what was it before at like 5K or 3K or 2K, whatever it was. But we're heading into this area of resistance that a lot of traders are going to have eyes on. Okay. What you fail to realize is that once you become a stock split, you become a new company. So you're building new value here for the specific trend of that specific price point. You're no longer looking at the past anymore because all this is irrelevant from the past movements and price points. Google is now a new company. So coming here over 118, 120, I think the 120 break is going to send it all the way to 130. Now, I'm going to be very careful because we're heading into this new unknown land where if we do break out, it's going to be all psychological. It's going to be 121, 122, 125, 124, 126, 128, 130. That's how you got to start thinking about Google. Google overall it's a great stock to own, in my opinion, and it's a growth type of stock, and at the same time, it's part of the FANG stocks. It gives a lot of weight in the market. So that's the only thing I'm looking for Google. I'm looking for the break of this, that 118.70, 119, 120. I kind of want to see like what it does up here. I'm gonna try to find some good dip buys between 116 and 117. As long as it doesn't drop any further, create some accumulation up here in the next few days, and then watch it bust above like 120, probably hopefully into like next week or something, right? Could happen this week. Who knows? The other ticker is Meta. Meta has been struggling quite some time, guys. Like this ticker has been getting beat down so bad, and social media ticker, and we're just looking for this nice accumulation phase to break out. That's it. Okay. So far, we're stuck. We're not going anywhere. 172 to about 156. All right, we're not going anywhere yet, just yet. So keep your alerts over that 172. Okay, once we start busting 172, you're gonna look for this top up here, that 185 level. Definitely start scaling out around 175, 180. But we are looking for that top of 185 high in case this does break out. So again, all the tickers that I'm giving you guys, they're at important levels. They're accumulating very well. So these tickers can literally move if the market goes like crazy bullish, and these tickers can also reject just as fast if the market goes bearish. The next one is going to be CRWD. What I like about this one is the nice trend that it's having. Okay. So I'm going to, this one, I'm going to be a little bit more different, and I'm going to use these wicks. These wicks at like 195. You see that? That 195. All right. So let's get that. All right. That 195. This resistance right here is kind of heavy because of what's going on in the past. All right. So check this out. So all this right here. And what I want to look for is that 200. This piece right here. So I want to look for a bust through and to touch that 200 and to reclaim it as a new demand. Look at all these resistance, all this supply up here is just chilling. And we try to stay above at one point, but then we flushed, came down and for earnings. And after earnings, it's just been rocking and rolling. All right, not a lot of crazy movement, but it's definitely pushing up from this 150 back to this 190. It's not a bad move actually, okay? So I am looking for this CRWD to just take a little run for it. If you want to follow this nice little trend line, go ahead. Use 190 as a sentiment. So over 190, start looking for long. 195 and 200 would be your target points. If we do break 200, guys, we're looking for about 205. Yeah, right here. 204, 205, right here. Yeah, 204.50, 205 around there. So those are the three targets that you would have. Remember, over just 190, you want to think a little bit more bullish. If we start breaking below this 185, start thinking bearish a sec because it'll be the break of that trend line and then back down to this 170. So giving you the target to 170 with a strong bearish market, okay? Other than that, watch out for Tesla, guys. Tesla is going to have a lot of attention as well. It's currently sitting right here at a retest of demand. If it does give up this 860 level, it's most likely going to drop back down to this 800 or even 780 level. Tesla is a very volatile ticker, and I really don't like putting it on a watch list. It does have a stock split coming up, so the reaction may be a bit different. People might want to drop it to the downside just so they can get a cheaper price point, or it literally might just rally back on up to that 950. I mean, there's multiple things that can happen for reaction of a ticker. So can't really do much from there, right? But it did announce that stock split to 3-for-1, which is pretty cool. You know, good for Tesla. They are a growing company and they're doing great. Other than that, guys, it's not really much after that. The NQ is looking good, still on a nice staircase pattern. There's nothing too crazy about the NQ. RQY basically broke a nice downtrend. Let me show you. Broke this downtrend here and it finally rallied up. If you guys are wondering what this is, here was your trend. Yeah, we closed above, came down and retested properly, and then pushed above on that green candle. So that's why I'm kind of looking at banks, because the banks give it a little more room to push above and some more strength. So I'm looking for that 1950. I think that's the high of the good uptrend that we're going to have, and we're going to probably stall there. Just as ES will probably hit that 43 or that 42. So a lot of important levels in this market, guys. I just want to make sure that if you guys are on the bearish side, tip number one is make sure that the three futures, ES, NQ, and RQY, are in your favor. If they are not in your favor, be careful, okay? We want the sectors, the NQ, RQY, and ES to be in the favor of the breakouts, all right? That's once you have one that's a little bit off, one's up, one's down, it makes it a little more difficult. So it creates ES to still trade range. Okay. So you want NQ and RTY to be in your favor in order for us to go bullish or bearish to either direction. All right. So other than that, guys, the VIX is still down. The VIX is at 21. If you guys don't know, once we start hitting 20, 19, and 18, there's going to be like no fear in the market. But yeah, hopefully you guys have a great week. Remember that we are in a doji. Break above that yellow box right here. Go bullish. Break below. Start thinking bearish. All right. So hopefully those tickers you make money off of, guys. If you guys have any questions regarding this specific watch list or the specific breakdown, let me know. I am Chef, and I am in Conservative Collectors. And y'all have a great week.